Good evening, traders, and welcome back to BCR's Evening Market Outlook. So taking a look at WTI first, tensions in Iran have remained elevated over the past 2 weeks, pushing oil prices to their highest levels since 2022 and raising concerns of a renewed energy-driven inflation cycle. The key risk lies in the Strait of Hormuz, where disruptions to tanker transport have already caused significant supply losses. If the strait remains closed, the resulting shock could exceed the impact of the Russia-Ukraine conflict, with limited global capacity to absorb the disruption. This comes at a critical time, as major central banks prepare policy decisions. Rising oil prices are already feeding into higher inflation expectations, while growth forecasts are being revised lower. Analysts have raised inflation projections across the G7 economies, with US expectations rising to 2.7%. Markets have also shifted, with many now doubting near-term rate cuts. The broader concern is stagflation. As rising prices begin to coincide with slowing growth, a risk already reflected in the rising US Treasury yields. Next up, taking a look at the dollar index. Despite the recent gains driven by risk aversion, a sustained US dollar rally appears unlikely. The current environment lacks the conditions seen in 2022 when aggressive Fed tightening, weak global growth, and surging commodities drove strong dollar appreciation. Today, global trade remains more resilient, and the Federal Reserve is still expected to ease the policy. If energy tensions do not escalate further, cyclical pressures may weigh on the dollar over the coming months. High valuation levels and improving global growth could also shift capital toward higher-yielding regions. At the same time, signs of weakness in the US labor market may further support expectations for rate cuts later this year. Lastly, let's take a look at gold. Gold has struggled to break higher despite geopolitical tensions, reflecting patterns seen in past conflicts where initial gains fade as interest rate pressures build. In the short term, rising energy prices, inflation concerns, and a stronger dollar are weighing on gold. However, the longer-term outlook remains positive, with prices expected to trend higher as gold continues to serve as a hedge against currency risk, inflation, and broader economic instability. That's all for today, and I'll see you in the next market update.